we're going to talk about Monday's market open in position 3. Now, before I do that, I have to very quickly do a brief overview of positions, the main ones at least. Oh, shoot, I got to get another moving average up here as well, too. Let me get the 20-period moving average here because it's missing. This is Monday's open. This is Friday's late day data. As you can see, judging by where the two main moving averages are in relationship to each other, you were talking about a relatively narrow state here. Let's say this is the state. This is what represents the small distance between the two main moving averages late yesterday or late the prior trading day. Now, position regarding this state, you can have 1 right above it, 2 higher away from the state, but not super high, and then you can have super high away. And you can have the same thing on the downside. 1, 2, and 3. Here's a narrow state. And you have 1 right below it, 2 deeper below it, not close, but not super far. And then you have super far, which is 3. Now, the way we play threes most of the time is to go the other way. So if your stock opens at 3 way above, for whatever reason, the best trade is going to be back down. Vice versa, if your play opens in 3 to the downside, your best play is going to be to the upside. Now, while the world was panicking off the open because, right, the market was opening in position 3 Monday morning, as rare as it is for me to be 100% long focused, I was 100% long focused. Right? I am a natural shorter. That just comes from me being a market maker for many years. But I will tell you that Monday morning, there were no shorts on my mind, only longs. And they proliferated. I'm a stickler for a trader not leaning. I call it leaning. I don't like when a trader goes into the morning leaning. I know it's going to be a long. I know everything's going to be a long this morning, and the market hasn't opened yet. But in this scenario, the leaning was just so obvious. It was so obvious that the leaning wasn't all that wrong. There are no absolutes. Most of the time, it's not good to do that. But in a scenario like this, I was leaning long all the way. Even if I saw a short, I'm not taking it because everything is down so much. I zeroed in on Meta on Monday morning. And Meta has become for me one of the leading stocks. What do I mean by that? Apple used to serve as the market's main leader because it was the stock that was most heavily, first of all, Apple was the stock that was most owned in the world. And it was also the stock that had the heaviest weighting in all of your indices. So you could monitor Apple to determine what the majority of market participants were experiencing, thinking, or feeling just by looking at what Apple was doing. Apple's leadership in that role has detached somewhat. And while I can't say there is a new dominant leader that has taken place, that has taken number one leadership in as dominant a way as Apple had it, no. But Meta has displayed some of those leadership qualities that Apple used to have in a very dominant way. Apple still has some, but it used to be really, really powerful. And it's not so much now. So I think the leadership is sort of shared amongst a variety of other things versus one now. And Meta is one of the key ones that can display that leadership. And again, meaning that when a stock is so owned by most of your institutions, most of your insurance companies, most of your pension funds, most of your money managers, most of your mutual funds, most of your indices have it in the index, it becomes so thoroughly owned that you can look at that stock and say, and you can tell what the market is feeling. Why? Because everybody owns it. So if it's having a bad day, everybody's feeling bad. If it's having a good day, everybody's feeling good. All right. So Meta has some of those characteristics. So I will often look to Meta. Now it's a little pricey for most traders to trade. And I actually wish it were back down in my sweet spot, which is about 160 to 180. I love that price range, but it is what it is. So from position 3, I am looking for power. Now, what are the power things? Elephant bars, tail bars. My God, if you were to get dual tail bars, that's even crazier. A bear 180 down there is very powerful, which tail bars are actually hidden bear 180s, right? This is more like a delayed bear 180. These are the preferable ones. There are others. You don't have to have power to have a play down there. You can have an acorn down there. You can a little tiny bar. You can have a regular green bar or a regular red bar that gets taken out. I prefer to see power right off the bat from position 3. This sets up the scenario where the odds are now, because of the position and because of the power, you move these odds of a pop to the upside in the 80s. It's the high 80s actually, which means that high 80s% of the time you're going to get follow through from this. So I am going to go over my trade, and I do some advanced things that you might not be ready for, but I will also explain. When I do something advanced, there's always the version that is okay for you to do right now if you're not ready for the advance. So I'm going to cover both of those. So of course, our first bar, we get bull 180, powerful bar. So I go into the bar as soon as I'm aware that this is a bull 180. I'm past that 1 minute mark. I'm in. My stop is under the low. Now, as I'm in, as it keeps going, guys, let me show you this. I'm going to try to open this up a little bit so you can see some detail here. In, and it continues to go higher. As it goes higher than my entry, I began throwing orders to buy any dip below my entry. So it must start to go higher. So if this is my entry and it starts to go higher and higher, I start to throw lower and lower. Oftentimes there's that flutter that you'll get, and that to me is a gift. I try not to miss that anymore. Now, you can see that what Meta did was it dropped the second bar into these orders and came all the way back up. So now, without superseding the high of bar 1, where I got in, and let's just say in, we're now back here, and I'm profitable on the trade without bar 1 even being superseded. Does this make sense so far? I am buying the drop with confidence that the drop is temporary with my stop under the low. Make sense so far? Now, I often get this, Oliver, well, what if it just kept going down? Well, I would have stopped out. I'm not so comfortable with a lot of you doing that. Perhaps that's more common later in your developmental period, but I am okay when you see that scenario and it eliminates the entire red. So remember, this was red first. That's how that bar looks. And you're like, whoa, is this going to break the low? And then it starts eating on itself and moving back to the upside. Once it eliminates all the red right there, boom, one can add right there. So that's the more conservative version of what I'm doing. I'm buying into the red. You'll be buying on the elimination of the red. That's what I teach you. I teach you color changes. This is an elimination of red. Boom. This is an elimination of red. Boom. That's what I'm teaching you. This is an elimination of red. Boom. It was red first and then got eliminated. Instead of it being eliminated the next bar, it's just eliminating its red in the same bar. So let's go over it again. I'm in, stop. I've got orders beneath me, which I grabbed 3 additional lots. Now I'm profitable already as the stock has moved back up. Basically, the rest is history, guys. I start taking profits here. I leave a little bit in and I do get this final thing up there, but with just a small amount. What I want to cover now with you is, because you're playing against position, even though you're doing it correctly, you're still playing against position. You still have a lot of people above you that own the stock and are now hurt. So there will be a pressure applied from them. Once they have deep losses here. Once they get some of their loss back, you will start to see pressure increase on the sell side. So remember, we're always going to fill the gap in. We're going to cut it in half. You don't have to be so perfect with this, just more or less. You're going to do a third and a third. So halfway mark, here's 1/3, and there's 1/3. This will help you get a general idea of where the move can potentially go, a good idea of where the move can go. And you're always looking at these 2 boxes. So this would be on the smaller side, and this would be on the full mature side. Can at times you get here? Yes, but the odds start really getting small. And so I think that's a neat little way of determining what your potential is. Combining that gap, splitting that gap in half and in thirds to come up with your profit-taking ranges. XY Dragon Z is saying, can you please give an example? I wouldn't know how to give you an example other than telling you that I bought 3 times on the drop. Now, I'm not so interested in average price when I'm doing it like this as much as I'm interested in size. This is too small to be worrying about average price. Guys, I look at all of these as my entry price, right? So this entire bar is my entry bar. This entire bar's range is my entry bar. So I'm not overly concerned with price. I'm just concerned with me getting my size in that bar's range. In the case of Tesla, you did not have the elephant, you had the bottoming tail bar. Boom. I think it's important to make this clear. From position 3, and this is, let's say, position 2, and this is position 1, right? From position 3, you have a greater possibility to whale out. What's a whale? The 2-leg move. From position 2, no. Certainly from position 1, you shouldn't be short. So position 1, 1 leg. From position 3, you do have the chance to get 2 legs. I just believe that since you're fighting position, you should still largely be a 1-leg trader. And if you want to re-enter to try to catch a potential second leg, that's fine. But I've always felt more comfortable coming out on 1 leg. So this turned out to be, I would say, a type 3 whale. But I would not have known that until we got here. So for me, this is a 1-leg play right there. Boom. I'm gone. If we let's look at Amazon. Let's see what Amazon did on the 5th. Okay, so you had a tail that turned into a torpedo play. Boom. First color change, add, and 1 leg. It's almost like dual tails. Boom. It's our knowledge of our ability to break things down in position, in location, to not get thrown. There was a lot of people on Monday that were thrown with all the negativity out there. and it held people back from being buyers. Okay, so Shin S is saying, I recall, OV, when you're saying in the past that if a gap is extremely large, don't expect a reversal. Well, yeah, it becomes more like an IPO, but that's beyond 3. So that has nothing to do with position 3. So 2 and 3. So let's say you're way, think of this like the firmament, right? You're still in the firmament. And even above, there's a firmament above, right? Now, outside of the firmament is a different story, but as long as you're inside, I know it's somewhat subjective, but you know, sometimes we've seen these stocks where they're gapping up $60. Like that's outside of everything. That's broken through all the positions. So, you know, you can't really count that. Yeah. You have a stock, let's say, that's losing half its value or something like that. That's really, really, that's too severe. Any other questions? Did some of you grab these longs? I know some of the traders with me did. They were all over these longs. Trades can't hurt you. Only you can hurt you. I've talked about this on many occasions, but there is no such thing as a risky trade if you will never lose more than maximum loss per trade. And a maximum loss should not be a big loss. It should be a loss that's easily recoverable. So if you will not lose more than maximum, how is any trade risky? How? It's impossible. Every trade becomes the same, no? Now, from a risk perspective, from a stupidity, intelligent perspective, maybe that it could be a stupid trade, but it's not a risky trade. There's a difference. Your risk you have defined as always maximum. If your maximum loss is 65, then your risk is 65 for every single trade. Your maximum risk for every trade is 65 or 75 or whatever it is. So this idea that a stock can hurt you is really a novice idea. Or that one trade is riskier than the other, that's a novice idea. The only thing, one trade can be more intelligent than another trade, but it can't be riskier. Do you understand what I'm saying, guys? That every trade is the same if you're applying maximum loss per trade as part of your plan. Odds, no, it's not so much, Costa. Yeah, the odds can be different. Like you can take a low odds play, but your risk is still the same. Like a low odds play for me would be going long here. I'm gonna buy that. That's a lower odds play than going long here. The risk might be the same, but the odds are different. I want you to be so location focused that it becomes like walking. It becomes like second nature to you. That you just automatically place things in their proper location. Okay, that's a 2, that's a 1, that's a 3. Because I will tell you that the traders who are good positioners, location scouts, if you will, they are the best traders. They are the best traders. This is why when you're following the plan properly, you're identifying and immediately placing what you identify. You're identifying the item, let's say a bottoming tail bar. And the next thing you're doing is asking yourself, where is that bottoming tail bar happening? What's the location? And you get those two things right. The best traders get those two things right. They play, they don't create events. They don't make something a tail bar that's not a tail bar. They don't imagine things that aren't there. Some traders are like, yeah, I played that elephant bar. I said, dude, that's a little green bar. How is that an elephant bar? They got sloppy, meaning that everything green to them is now an elephant. They don't do that. So they're pure with their events and they're pure with their locations. So I want you to you go through your week this week with location on your mind. Where's the stock opening? What's the location? You know, and it'll frame the most proper action to come from that location. It'll frame it for you. This is your assignment. Location, location, location. I need you to be real estate location scouts, but from the market point of view.